Can you really start investing with just $100? Many beginners assume the stock market is only for people with large portfolios and years of experience. But thanks to fractional shares, low-cost brokerages, and easy access to investing tools, getting started has never been more accessible. That's why I decided to take on a challenge. Invest just $100 and see what lessons, opportunities, and results could come from such a small starting amount. Today we will talk about $100 Stock Market Challenge Beginner Edition. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. The $100 challenge is not about getting rich overnight. When most people hear about turning $100 into a larger amount through the stock market, they imagine finding the next company that explodes in value and makes them wealthy in a few months. The reality of successful investing is very different. The $100 Stock Market Challenge is not about gambling, chasing viral stocks, or making risky decisions. It is about learning the skills and habits that can help you build wealth over many years. That first $100 represents something much bigger than its dollar value. It is your entry ticket into understanding how investing works. 9. Start by understanding what you are actually buying. One of the biggest mistakes beginner investors make is buying stocks without understanding what a stock actually represents. A stock is not just a number moving up and down on a screen. When you purchase a share of a company, you are becoming a small owner of that business. Your investment is connected to the company's products, customers, leadership, profits, and ability to compete in the future. Before buying any stock, take time to understand what the company does and why people choose its products or services. 8. Build a simple beginner portfolio. With only $100, diversification is still important. Instead of putting all your money into a single high-risk company, consider spreading your investment across different types of assets. A beginner could place a large portion into a broad market ETF that provides exposure to many companies and use a smaller portion to learn about individual stocks. For example, a simple educational portfolio might include around $70 in a diversified ETF and around $30 divided among one or two individual companies that you have researched. 7. Focus on learning, not daily price movements. One of the biggest traps new investors fall into is checking their portfolio every hour. They become excited when the price increases by a few dollars and frustrated when it drops. This emotional behavior often leads people to make poor decisions, such as selling during temporary declines or buying based on excitement. A $100 challenge should be treated like a classroom. Use it to understand how markets react to news, how companies grow, and how different investments perform over time. The knowledge you gain can be far more valuable than the short-term gains or losses from your first investment. 6. Add money consistently instead of waiting for the perfect moment. The biggest difference between people who build wealth and those who stay on the sidelines is consistency. Many beginners spend months trying to predict the perfect time to invest. They wait for a market crash, a better price, or a more certain economy. However, no one can consistently predict the future of the market. A better approach for many long-term investors is to invest regularly, whenever they have available money. Even adding $10, $20, or $50 every month can slowly transform a small portfolio into a much larger one over time. 5. Avoid the biggest beginner mistakes. The stock market can be exciting, but excitement often causes expensive mistakes. Many beginners chase stocks that are trending on social media, invest in businesses they do not understand, or panic and sell whenever prices fall. Others believe that a single investment will make them financially free. Successful investors usually avoid these traps. They research before investing, think long-term, control their emotions, and understand that temporary losses are a normal part of investing. Protecting your capital and developing good habits are often more important than chasing the highest possible return. 4. Understand the power of compounding. Compounding is one of the most powerful forces in investing. It happens when your investments potentially generate returns, and those returns can then generate additional returns over time. At first, the progress may appear very slow, which is why many people quit too early. The early years of investing are usually about building the foundation. The real power of compounding often becomes noticeable after many years of consistent investing and reinvesting earnings. 3. Study the businesses behind your investments. A successful investor never stops learning. Use your first $100 portfolio to study earnings reports, business models, industry trends, competition, and company strategies. Ask yourself important questions. Does this company have products that people will still need 10 years from now? Does it have advantages over competitors? Is it financially strong? Learning how to evaluate businesses can help you make better investment decisions throughout your life. The money you spend gaining this experience may become one of the most valuable financial educations you ever receive. 2. Be patient and think in years, not days. The stock market rewards patience more often than speed. Many people enter the market expecting quick profits and become disappointed when they do not see immediate results. They jump from one investment to another, searching for a shortcut. The most successful investors understand that wealth is usually built slowly through years of consistent investing. A company may need years to expand, launch new products, increase profits, and create value for shareholders. 1. Turn your first $100 into a lifetime investing habit. The greatest achievement of a $100 stock market challenge is not how much money you make in the first month or even the first year. The real victory is becoming the type of person who consistently invests, learns about businesses, controls emotions, and thinks about the future. Your first $100 is a small seed. If you continue adding to it, reinvesting your returns, and improving your financial knowledge, that tiny beginning can eventually grow into a significant portfolio. The people who build real wealth are usually not those who started with the most money. They are the ones who started early, remained disciplined, and allowed time to work in their favor. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.